So when trading the wheel strategy, there's going to become a time where we have to roll. And oftentimes we want to roll for a credit, right? We want to improve our strike or go out in expiration. But there's going to be times where it's time to take the L. It's time to roll for a debit and have to pay some premium to keep this trade alive and not get a sign on your shares. Oftentimes, guys, we get so focused on not losing any premium, that myself included, we shoot ourselves in the foot when really what we should do is take one step backwards to take two steps forwards. And I recently did that. We've been talking about it a lot inside the Discord. So I just wanted to clear up exactly why I made the move that I did. So if you caught my last video, guys, you know that I've been in a battle with Google. I made a couple of mistakes. That's what that video was about. I'm way below my basis. And essentially, I started right here with a covered call at $92. And really since then in February, Google's been on an awesome run, which is great because I own the shares. Now, this is kind of like one of the things that we have to deal with if we're going to be trading with something that's a potential growth stock like Google. But essentially, it's been on a tear for this year. And I've been rolling up in strike. I started at 92, 94, 95, 97, 98. But when I got to that 98 range, that 97, you can see I was at 97 from March 15th all the way to April 15th. So 4 weeks rolling at the same strike, just moving it out and really getting these net credits of like $10, $20. Now I'm able to come on YouTube and say, look at me, I'm not losing any money. I'm still getting a credit. I'm still rolling for a credit. But in hindsight, I probably should have just rolled up in strike, done it at a debit, because then I would have been able to write at the money essentially and collected more premiums. So I could have taken a debit to roll it up in strike, but then I would have immediately started to get more premium back to make up for that loss, if that really makes sense. And essentially my hand was forced to do so. And after I talk about this Google, I'll show you all the trades I made in May. So we'll just get all caught up to date. But essentially what happened was I'm at $98 and it shot up. I mean, it's been in the 110s and it hasn't had one of those dips, all right? And it just kept going. And I got to a spot where I'm like, I'm really, really at a danger of getting this thing assigned. I think it was at like 117 and I wrote it up to maybe like $110. I got it to here, right? So this cash or cure put, that was trying to better my situation. That wasn't part of this roll. But I went from 98 to 100 and I thought to myself, man, it's at $117 right now. That is $1,700 in capital gains I will lose if I get assigned. Essentially, we want to roll when we don't want to get assigned. And I knew that if I got assigned at $100, I would want to wheel this and try and write puts where I got assigned. I wasn't going to be able to write any puts at $100. So the long and short of it was, if I would have got assigned at 100 with it $17 in the money, I still would have been having to make my strike higher for the puts and I would have lost money here or there. So what I did is I rolled this up to $100. I was like, still not happy with that. So literally like an hour later, I said, F it. I'm going to roll it up to 113. It cost me $17.56 to do so, which made me look, like I said, it pretty much wiped all of those premiums clean, pretty much break even, you'll see, on those premiums. But in hindsight, right, the portfolio is not just about how much premium you collect, right? Our goal is to grow our portfolio. So I bettered my situation capital gains wise by $1,700 or by $1,300, right? I really went from 98 all the way up to 113 in one day, right? So that's a $1,500 gain in capital gains. If I got assigned at 113, I'd be much happier when the share price was at 117. That's a $4 swing. Google can do that easily. So I took the L in premium to get it back in capital gains on assignment. That's really the reason and how I decided that I was going to now roll this for a debit. And you can see this first one here, I did roll it for like a $200 loss. And I was like, all right, I'll take the loss. Like I was willing to do so, right? I bought it for $19.90 and then I reopened another one for $17.29. So I took about a $210 loss in premium right there. But like I said, then I was like, no, I need to get this basis up because I need to get the strike up. Google, I wanted to keep going. I wanted to keep going up and I'm willing to get the capital gains back and hold this stock long term than get assigned at 110 just so I can come onto YouTube and be like, look at me, I never lose and have to pay premium. That's not the real world, and that's not how it goes. And these right here are some of the risks of trading the wheel, but the benefit is it's Google. So like I have 100 shares of Google still, and right now I have a strike at $113. That's pretty good, where we started at 92. So capital gains wise, I'm doing just fine. I'm happy. So since I got caught with my pants down, $92 when I got assigned, my basis loss was 47, right? Because you guys know the story. You got watch the channel. The premium I've gained, now I'm in the negative in premium. All of these lifetime, right? Lifetime Google, I am down $273 on my premium, but that's okay. That's essentially 1 week at the money. I'm going to make that back. Instead of rolling for these small credits, I'll show you what an at the money Google call will be right now, and we'll see why I'm not that really worried about the premium gain. The strike assigned profit, if I get a sign right now, it'll be up $2,100. So my net position for Google right now is minus $2,900. And like I said, I'm perfectly okay with that. Essentially, you guys know the Google story. And if you don't, you're new to the channel, welcome. Go back and look at some of the titles with Google and you'll see how I got myself into this mess and how I'm getting it out. But now let's look at the whole portfolio. Let's zoom out and see some other plays that I'm making and why this is just zoomed in, right? Zoom in, we can make anything look good or bad. Let's zoom out a little bit. So here is the month of May. I am minus $4. Like I said, I'm not too proud. I could wait a week and make this video and wait till I'm in the green, right? I'll make it red right now. I'm red. It happens. I'm not perfect. I'm red. You're going to be red too. I'm red because of that Google roll and that position. Everything else is doing pretty good. You can get this spreadsheet if you are a Patreon member. That's the first link down in the description below. You can also jump inside the Discord. You can see I've added fancy little drop downs now. So I added my tickers and things like that just to make it a little more uniform. I've added an ex-dividend date because I am now trading the wheel with things that have dividends and ex-dividend dates, which causes early assignments. So that's something that I wanted to be aware of. I held those on Starbucks, so I'm about to get a dividend on those. I love dividends. You guys know how much I love dividends. So I'll show you exactly what that is. But right now, wheeling Starbucks, Google, Apple, NVIDIA. I did a cash secure put on NVIDIA, got $218. That was open for 4 days. Holding them on my average about 5 days, you can see. But right now, $843 for the year. My monthly income, roughly $169. And you're like, oh my God, Brad, you have a $37,000 portfolio and you're on here flexing about your $843. Yeah. Monthly return, just about 1% with this debacle and with my January debacle where this whole Google thing started. Take Google out, right? I can make this look really, really pretty, but I've told people time and time again, 1 to 2% for the year per month should be happy. This is an extra 12% I'm looking to get on my portfolio. Right now, it's returned year to date 2.42%. But like I said, I increased my capital gains. If we go to my portfolio in Robinhood, year to date, I'm up 8.43. So I've gotten 6% growth, 2% from the wheel to give me up $3,000 for the year. I will take that all day. And guys, I don't take sponsors, but I will sponsor myself. The Wheel Strategy book on Amazon. That link is also in the description below. If you like to hold stuff, right? You can find it all for free here on YouTube, but you got to figure out the order all on your own. Get the wheel, but very, very affordable. You could check it out. I just got notified Amazon's going to be increasing their prices. I'm not going to increase my prices. I'll take a bigger L on this because I want you guys to learn it. So go check it out. You can read the reviews and things like that and see if you want to hold it and have everything nice and organized when trading the wheel. And if you've bought the book, thank you so much. Leave in the comments if you like it. I like to get the feedback. I don't always read the comments on Amazon, so let me know if you like the book. So that's really the portfolio right now, guys. Over the last month, it is up almost 3%. The last week has been pretty much even, 38,301. I does say buying power, 36,000. I do have Robinhood Gold, so that is also the margin that's available to me, but I don't really trade on margin. That's not really my style. I'm working with Apple, Google, Starbucks. I will play around with NVIDIA. I would like to get Amazon, NVIDIA. These are the watch lists and probably the order that I'm going to pick these up as I go along. So if you continue to follow along with the channel, you'll see me eventually start wheeling Amazon, NVIDIA, and Microsoft as well. That's really the goal. And like I said, I've also started adding back 2021 and 2020. So you get a full picture. If you get the spreadsheet, you'll see what I'm up to. I'm importing all that data. So you can really get a whole 4-year look at every single trade that I've made over the last 4 years. So we always want to try and roll for a credit, guys. But if you have the type of stock and it's just on a run. I'm not talking about like it spikes up at earnings, you know it's going to come back down, or it shoots down at earnings, you know it's going to come back up. But if it's been on a steady tear over the last couple weeks and you've been rolling and you've been rolling, here's Google again, over the last month, like this is very, very hard to roll at a credit when it just keeps doing these big old spikes and big old spikes. So I'll take the capital gains right now, $119. We can see the average cost, $92. So that's a really, really good position for me to be in right now. And you might want to just take the premium loss to gain capital gain and be able to write closer to the money. I did say we'd look at closer to the money. I will say when I've been rolling this, I've been rolling it for about a $10 to $20 credit. This is 3 days away. Let's just go out to next week, sell a call at the money, $195 at the money right now. And like I said, when I tell you that right now I'm down, what did I say, $200 or something like that? $273. Essentially, 2 more weeks, I'll be back in the green. Not only will I be back in the green premium, but I will be up in strike. Did I essentially, quote, waste all of this time that I've been trading Google to really get nothing out of it? Yeah, I guess you could call it a waste if you're only looking at premium. But like I said, I have a $92 stock, 100 shares of it, that's now trading for $119. And I don't know too many people that would hate to be in that position, guys. I hope this video helped. If it did, leave some comments, leave some questions so I can make some more videos in the near future. Sorry I haven't been making videos. It's personal, but I'm going to try and get back on a normal routine. And I'll see you guys on the next video.